bull market, and you can glean all of this from the past year or so, is far from over because trillions of dollars are still sitting on the sidelines. That, according to my next guest, who manages $6.6 billion in assets. But with less than 3 weeks to go until the election, got a lot of you out there who are very afraid to dip your toes into the market. Neil Hennessy of the Hennessy Funds says what?
If you're in the market, stay in the market. If you're not in the market and you're in fixed income, you should be getting out of fixed income and at least putting your toe into the market.
Even before we know who will be the next president.
You know, Liz, I get that question all the time. If you look at it, the business survived the last 8 years and did extremely well. Profits are at an all-time high. So, you know, if a new president, be it Donald or Hillary, comes in, business will figure it out.
And what do you, as you wake up every morning, do you tune out the Twitter battles and things like that, and you just go with fundamentals? Do you go with technicals? Do you look at levels of where stocks are, PE ratios? What's the #1 metric?
The #1 metric is the price-to-sales ratio. So I won't buy anything that has a price-to-sales ratio of 1.5 or more. So we're not going to pay more than $1.50 for a dollar in sales. That way we can find value in the marketplace.
Okay, but you just said that you can't look at what's happening with the election. So is it fair to say there are election-proof stocks, and what are they?
Oh, I wouldn't say there's election-proof stocks. What I would say is if you look long-term, just take the Dow Jones right now. It's yielding 2.6%. If you look at a 30-year bond, U.S. government bond, it's 2.6%. So what would you rather have for 30 years? All 30 stocks in the Dow Jones?
That could go up.
That could go up. And most likely will over 30 years versus 2.6 on your money for 30 years? That doesn't make any sense. It's not logic.
All right, but as you look at the names out there, what excites you at this point?
Well, there's 3 companies that I would look at, JetBlue being one. If you haven't flown JetBlue lately, they've really upgraded their planes.
They've also got that Mint class. Have you done it?
Yes. And it's fantastic. I mean, the service is very good. The food is very good. You've got a company making $2 a share. It has a price-to-sales ratio of 1, and they pay no dividend. So there's an opportunity to get dividend income.
Okay. I have to ask you, though, because we've got the Fed Beige Book out, and that, for those of you who don't know, is the Federal Reserve looks at certain regions of the U.S. and reports how they're doing. There was one flash that came out among all of them that grabbed my eye, and it said that some of the regions said there are some sources of economic uncertainty, patches throughout the U.S. due to the election, but not everywhere. Why? Because wage growth is fairly steady and at a modest growth level. What should that tell an investor?
Well, I just think you're going to see wages go up in the future. They're not going to go up huge, but they're going to start to go up because, look, there's still a lot of people that are looking for jobs, and it's going to just cost more money. That's all.
Neil Hennessy of the Hennessy Funds, great to have you.